people are wishing like, oh, I just want a low rate so I can finally buy a house, or I can finally buy this investment, whatever. But you are wishing for essentially a downfall in everything else. So
Yeah.
yes, you might be able to secure that, but do you think your job will be safe at that time? Do you think, your money will be safe at that time? I think there's a lot of things that people are kind of not thinking about, only isolating their focus on one little thing, which is mortgage rates.
Alrighty, folks, we are going to talk about DSCR loans in the mid sixes. We're going to review Fed Day, and we're also going to catch up on some deals Mr. Jonathan has been working on, one that he did months and months ago, one he just closed in a 16 unit. So he is doing deals. But Jonathan, I suppose we should start with Fed Day. It is yesterday. We got the announcement, no cut. We got a boring statement. And then we had Powell in front of the media answering questions. What is your takeaway from yesterday?
Well, obviously, he's putting his foot down, right? Powell made a statement very clear. He said that he would continue to do his job in serving the public. And that means that, keeping their head down. He called it, we're keeping our head down, and we're going to continue to serve the public as best as we can, right? That was his comment on where it is in reaction to Trump's comment saying that I'm going to make the rates go down, right?
Mm-hmm.
So I think he really just put his foot down, especially with the move of not dropping rates. And we talked about this, I think, last time he did this, but he basically told the market that the rates are not going to go down as much as people think this year. So he told us he's been kind of a man that's true to his word for the most part, right? Whenever we've dealt with him over the last however many years. And we know that he's serious about, hey, I'm not actually going to drop, we're not going to drop the federal funds rate that fast. Yeah. And he's putting his foot down. He said, I don't care who's trying to pressure us. We're going to maintain steady course, and that's what's going to happen. So I think that was the biggest takeaway that I got from his position and the Fed's position in this whole kind of debacle that's going on.
Yeah, the other thing I took away from it is he really took away the thought of a March rate cut. He's basically saying we're not in a rush. Lots of data. Just because inflation should go down doesn't mean it will. And I think he really took away a March rate cut. We also got feedback from folks like I think it's Jeffrey Gunlock, who's out now post meeting saying, you know what, my base case is we're only going to get one rate cut this year. Which is very interesting because I know a lot of people in the mortgage industry. I interviewed somebody yesterday that does $100 million. They're in the camp of 4 rate cuts, and man, I just that's hopium to me. I don't see 4. I don't know how you get 4 rate cuts without an explosion in unemployment or something like that.
Yeah, I totally agree, and I mean you and us are typically on the same page in terms of where the rates are moving, and people need to realize, and again, this is repeating what broken record, but if rates go down, mortgage rates and whatever, that means that bad things are happening.
Yes.
Right?
Careful what you wish for. Yeah.
People are wishing like, oh, I just want a low rate so I can finally buy a house, or I can finally buy this investment, whatever. But you are wishing for essentially a downfall in everything else. So yes, you might be able to secure that, but do you think your job will be safe at that time? Do you think, your money will be safe at that time? I think there's a lot of things that people are kind of not thinking about, only isolating their focus on one little thing, which is mortgage rates, and not really considering the whole picture, which is, people are already quietly losing a lot of jobs right now. We're talking about like actual white collar jobs. Engineers are losing jobs. Analysts are losing jobs. Like there's a lot of people losing jobs right now that can't find new ones because the job market isn't opening up. So that is what you're wishing for in the case of rates, dropping down to where they want it to.
No. Yeah, I think it's going to be interesting. I think in the unemployment arena, I think 2025 might surprise us in a bad way. And what I mean by that is I don't think the unemployment rate's going to shoot up crazy high, but I think the duration, or what's called continuous claims, is going to shoot up because I think we're going to go from an average of 6 weeks unemployed to 12 or 14 or just something horrific like that. So I don't have great thoughts about 2025 to that point. But let's switch gears to something that's hopefully more happy for our audience. If they are looking at DSCR loans, even though one of the largest players exited the market, they can still get something in the mid sixes as of the day of this recording.
Yeah, absolutely. I mean, we're writing a bunch right now. The parameters ends up being if your loan amount's over 150. That's something we 150, 70% loan to value on a 3-year prepay, not even a 5-year. You're starting at like a 6.6, 6.5.
Okay.
So that's a pretty good market right now to get into. We talked about this. If you're in a 6 handle and you're in like the mid sixes, especially, you're not really going to be worried about what's happening in the rest of the market. That's like
Right.
a take it and run type scenario.
Yep.
And then if rates drop, into the 5s and the 4s, right? Then you can refinance out. But a lot of people, again, I tell people a lot these days, they're like, I'm going to wait till rates are 5.5 or 5. I tell them, to put it into perspective, if you want rates to be 5.5 or 5 on the investment side, that means that primary rates are back into 3 and 4, right?
Exactly.
And right now we're still in the 6s, so that's a pretty far drop, right? And then that kind of opens their mind to be like, okay, I guess I understand what you're saying.
Yeah, it's pretty
There's one
amazing.
scale. The one
It's
scale, which is the
yeah,
investment side, but what they're not realizing is they all move kind of together. So if your investment rates are lower, that means primary rates are lower, but primary
correct.
rates are still higher. So how can investment rates be lower than the primary rates right now? Yeah.
Yeah, it still amazes me that we still have hopium of rates in the fours. And again, I think there's a lot of people, probably a lot of people in mortgage and in real estate are jumping on the bandwagon of, they think 5.5% mortgage is the answer. 5.5 is going to make it better. And and if you think better is more transactions, you're probably right. But I do wonder what happens around that if rates were to fall that far that fast.
Yeah. And I mean, if rates, like DSCR right now is great, right? In terms of, we don't know, and this is kind of I always sound like a bad guy because in client studies, I was talking about bad. I'm always talking bad because I kind of tell people without hopium, right? And I
Yeah.
think some people just want hopium and they just want to do deals with people that are only giving them hopium. But I try to tell clients everything in a more realistic way, right? Because we've seen the DSCR market and the non-QM market over the last 4 years now.
Yeah.
And there's been an exit, and people don't talk about this, but there was an exit of the DSCR loan product 3 times in the last 4 years, maybe four
Yep.
times in the last 4 years. And that's not something that is to be ignored, because it's not like a conventional loan you will be there and it'll be backed and bought by Fannie Freddie, so it'll continue to be done. Like, deals will continue to be done. DSCR and non-QM doesn't work that way, because there's no expectation. And if anyone's telling you that tomorrow or the year after, like, DSCR loans will continue to be there and you're always going to be able to refi out in the DSCR loan, like, I tell clients that the people, they're lying to you, because the product's only been around for residential loans for about 4 years. So and it hasn't been through that downturn that we talked about, right? It has been through some sharp jumps, but we really tried to tell everyone that it's not a tested, tried and true loan that
Hmm.
endured an economic crash, and that it came out the other end okay, with okay
Yeah.
return for people to buy in. So there's no guaranteed future of tomorrow. So if you're buying something and you're at, let's say, the same example that I gave, like a 6.5, 6.6, or even 6.8 handle, and you're looking at the property as is today, which is what we're saying, do the work today, right? And if it works today at 6.8, it'll work even better if rates drop to 5 or 4.
Yep. Yep.
But you can't wait for the property to be like, even on a cash out refinance, I'm gonna wait until it's a 5.5% or a 6% flat. Like, where are you getting this magic number? Because the payment difference in a lot of these different things, especially if your loan amount's smaller than, like, I would say 500,000, like, the payment difference is the opportunity cost that you're
Yep.
you're giving up to just be able to deploy the capital. And guaranteed, if you deployed capital and you can make better than a 7% return on the money that you took out, you're making money on the money.
Yeah. I
So
love that.
that's kind of the mindset that I'm trying to get people in. I'm getting fired up about it because I'm like, I wish I could just shake everyone to understand that it's not like everyone's so tied to the rate, but it's not the rate itself.
Yeah.
Yeah.
Do the work today, write disrespectful offers, make sure cash flow is day one. DSCR loan sub 7%. Sounds good to me. Let's actually now step into some deals, right? You talked about a 16 unit and a 4 unit last week. We'll get into those in a minute. I actually want to go back to your first Koreatown deal where you were buying a house and adding some ADUs or other units. Whatever the heck happened with that?
So we bought it for, I think it's, crap, I'm forgetting now. I 134 bought it for 134.
Okay.
It was a 9,000 square foot lot, and it was 6 bedroom, 4 bath. And then
Okay.
I turned it into a 10 bedroom, 9 bath, including 2 ADUs. So one junior ADU stuck to the property and one detached ADU.
Nice.
We did that on a bridge loan because it was in horrific condition. Put about 300 grand into it to fix it all up,
Mhm.
and actually we just exited the loan last year. We exited the loan and refied out. Appraisal came back at 2.8.
Wow.
So yeah, yeah. So bought it for 134. Put 300 into it. So total cost would have been 164.
Okay.
Plus interest payments, whatever. So call it 1.7.
Sure.
But then we just got it appraised 2.8 in this market, right? In the
Right.
in the crazy market we're in. It came back 2.8. And we were able to pretty much pull out the money we put into the deal to fix it up. And now it's just rented. I rent it room by room. And I
Yeah.
actually I talked to the lumberjack landlord about this because
Nice.
he called me and he called me and I was telling him like, hey, I'm because the model in different, like, he's a very experienced investor, right? And I'm
Yeah.
like,
Yeah.
I'm like, I'm kind of doing the same thing for students and just people that can't qualify for technically like big apartments or normal apartment complexes. And everyone gets a room that's like, a good size. Everyone gets their own bathroom. Like it's kind of a good living situation for all these people. And I'm
Sure.
renting it out room by room, right? I'm doing like the pad split model.
Yep.
That's the only way that we're cash flowing. And we're, right now I think the gross is like 15.5 on that thing.
So you're grossing 15.5 total debt. You've refied all your debt out. So the loan's like 1.7, 1.8.
Loans like 1.8, and the payment, I did an interest only loan, 30-year fixed with a 10-year interest only.
Okay.
I caught the market when it was good, so I got that at a 6.875.
Nice.
But I again, I didn't do what everyone else is doing. I was just gonna take whatever was happening at that point in time, and
Right.
I basically floated it, and then I saw it dip, and the moment that it dipped, I just locked it. Like I didn't even want to mess with it, right? So
Yeah.
the payment with tax and insurance, I think, is 13,
Okay.
13-ish. Yeah. Yeah. So still positive, like 2K-ish. In LA, it's more like the appreciation play more than
Sure.
anything else.
Well, yeah,
But
you're sitting on $1 million in equity.
exactly, exactly. That's basically the main thing. But in terms of like actual cash flow wise, as long as it's not for me breaking, or as long as it's not negative,
Right.
I'm a happy camper. And little positive just to do repairs here and there because we're managing it ourselves essentially. So there's
Nice.
no property management expenses,
Nice.
no other real expenses because we're doing everything ourselves.
Cool.
So it's kind of a pure net 2K basically.
Nice. Nice.
Yeah.
Well, let's roll into the next one. I think you closed. That was a 16 unit deal a couple weeks ago. What's the story on that one?
That one is we bought it for 325, and the rents right now are 26 grand.
Okay.
Evicting one tenant, but for non-payment for like 6 months that we inherited.
Hmm.
So but in terms of everything else, it's this one we had to put a big chunk down. We put 37% down.
Hmm.
Again, caught this on, we didn't even plan this, but caught this on when rates dipped again, right? And in last month, on the rate lock,
Hmm.
and locked it in at like a 6.21.
Nice.
Yeah, on a 5-year interest only. And so monthly payment on the mortgage there is like 10K.
Okay.
and then obviously rents are 26 minus vacancy, whatever. So the net still ends up debt covering at like 120% right now.
Nice.
Yeah. So that's that one. And obviously
Where do you think rents go? Right, because obviously it's probably rented under market, I'm guessing.
way under market. The pro forma should be at around like 37K, because
Ooh,
these are good mixes. I think I brought it up last week, like 1 1s, but like 6 of them are 2 1s. So they should be like 35 to 37K on the market. But obviously we're buying the deal as is right now. We're making it work as is right now.
right. Yep.
So I think rents are going to continue to stay low, unfortunately. And what we're afraid about is a rent moratorium, and
Yeah.
all these eviction moratorium that comes around, and people, if they don't pay rent, how are we going to react, especially in California, in Los Angeles, where it's very, very hard to collect
Yeah,
money.
I got to tell you, you want to give me one market I'll never buy in? That's the market that you
Yeah,
just said.
yeah,
That's like the wild, wild west, man. No thanks.
it is. And it sucks because it's like I have a separate passion for the area, right? For
Yeah,
the
yeah,
community. So
of course.
which isn't the best way to invest, but in terms of the deals that I'm finding and doing the work and also building the equity in, like we're doing it, right? So
Yeah.
it works there. But I just had I just finished up an eviction thing for one of my dad's properties, and finished that, and I didn't learn my lesson, I guess. So now we're going back into the eviction cycle on this one tenant that hasn't paid in 6 months. But it's crazy how California is like one of the only states, I think, that you have to pay someone to leave that hasn't been paying rent.
Yeah,
So
it's wild. It's
for
stupid.
6 months. So yeah, that's the fun aspect of it right now that we're going through. But it's still at 26. We're still making it
Yeah.
work overall, and um you know again, do the work right now. And on that one too, this is why it's funny, because I tell clients exactly what I do, and a lot of them sometimes don't want to do it, but I tell them, like, when I'm buying and when I'm doing something, I don't really care where the market is, but if it dips while we're in process, that's the
Yeah.
moment you can strike. You can't,
Yeah.
like, once it's already dipping, and then you
Yeah.
try to jump into the water and say, oh, I want to lock and do all this now. It doesn't work that way. You have
Right.
to already be in process.
Yep.
So that's what I encourage people when they're like, hey, should I wait until rates? I'm like, just go into process. And then if it drops, great. If it doesn't, your rate and everything is still good right now and it all works.
There you
So
go.
do it as is right now.
There you go. Well, let's get into the one you just closed on. You just closed a 4-unit. What's that all about?
It is, it's a 4 unit in Koreatown. And it is the reason why I got it. It was bank owned. So foreclosure bought property. The reason why I got it is because in Koreatown, and just multifamily in California, or in Koreatown in general, it's very hard to find empty units and vacant units when you take something over, because everyone has lower rents and have been there
Right.
for a while. The previous lender had bought out one of the tenants already, already in the contract, and then in the process of buying out one more, and I'm inheriting one. So it'll be 4 units. 3 are going to be vacant.
Oh, that's
Hopefully,
good.
two are already vacant, and then one's going to be vacant in the next month or two, and then one I'm inheriting. So I'm going to be doing work, and I bought this on a bridge loan. I put basically 19% down, buying it for 113, and the appraisal came back 126 as is, and 17 ARV.
Oh, nice.
So I built in that, like we always talk about, the margin on buying a good deal, and making sure that you have a margin baked in, so that worst case scenario, if you need to offload it, you can offload it and still not lose money. So that's basically the position I put myself in on this. I'm gonna probably put like 150 into it to fix it all up, and then make a decision on whether to keep it and refi it, or try to sell it as like a first time homeowner
No.
type home, someone that wants it and needs it in the area, just because there's not enough inventory for people right now, I think, especially on a first time home buyer basis.
Yeah,
Yeah.
not a bad play. Residential loan, let somebody house hack it. I think that would be a nice play. Folks, Jonathan is the real deal. Not only does he one of the leaders of Convoy Home Loans, a frequent guest on the channel weekly, but he's also an investor just like us. If you go to convoyhomeloans.com and in the drop-down click ORaaT, you can work with him or his partner, Dustin. Jonathan, you're amazing. Thanks, buddy.
Thank you.